Today on Fear and Greed, the local share market is set to tumble today on the back of carnage in global financial markets. Prime Minister Anthony Albanese promises $2.5 billion for battery storage, and how the 500 richest people lost $900 billion in 2 days. Plus, the local auction market shows some resilience, and the Reserve Bank shows some confidence in households. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Monday, the 7th of April, 2025. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, we start this morning with a bit of a special announcement. The Fear and Greed newsletter is going daily. It was previously coming out once a week, every Wednesday. Now it is every single weekday at 6 a.m.
I don't think you've got enough vim and vigour in your voice this morning, Michael, because it's such an exciting day for us. A daily newsletter. We've been talking about it for about 18 months. We've decided to bite the bullet and do it. Every day you get the top stories you need to know about. There's an opinion piece in there. There's kind of some colour, shall we say, a bit more. It might be the interview of the day. It might be, our favourite numbers of the day. All free. Sign up at fearandgreed.com.au. Well worth it, Michael.
That was some good enthusiasm, Sean.
I'm very enthusiastic. I'm excited about the newsletter.
fearandgreed.com.au. Pop your email address in and you will be getting it every day. I'll also put a link in today's show notes so that you can find it nice and easily. Now, on with the news, Sean. The main story this morning: global financial markets are in turmoil, with the ASX set to fall sharply this morning. Futures markets are suggesting more than 4%. This is on the back of US tariffs, a retaliatory impost from China, and really fears of a global recession.
Indeed. Tech stocks on Wall Street are now officially in bear territory after the Nasdaq 100 dropped 6% over the weekend. It's down more than 20% from its peak. The broader-based S&P 500 was also down 6%, meaning since the Trump tariffs were announced, trillions of dollars, literally trillions of dollars, have been lost. The most recent sell-off was in response to Beijing announcing additional 34% tariffs on goods from the United States, the same rate imposed by the White House last week. Futures trading on the ASX 200 suggests our market will drop 4.3% at least on opening. That's worth about $115 billion. It would take it to its lowest level since January last year. Now, it fell 2.5% on Friday. It's already down about 10% from its peak 6 weeks ago. Investment banks are now forecasting that the US will fall into recession this year, and the Federal Reserve Chair Jerome Powell over the weekend said the tariffs unveiled last week, which were broad-ranging from 10% to 50%, were larger than expected. That is the big fear at the moment, a US recession which could lead to a global recession.
Some of those numbers are really staggering. That's equities, Sean. What about the Aussie dollar? What about the outlook for interest rates as well?
Some traders now think the Aussie dollar could fall below 60 US cents, and it's just above that level currently, which is a 5-year low, so it's about 60.4. So it probably will dip below that level. A trade war and US recession will likely push the global economy into recession. That cuts demand for commodities, and the Aussie dollar depends heavily on demand for commodities. The Bloomberg Commodity Spot Index, which is a gauge comprising 22 raw materials, dropped 7% in the final 2 sessions last week. That's its biggest 2-day loss since September 2011. We are talking about a big, big sell-off at the moment. If there is a silver lining, you will find that in my favourite market, bond markets. We love bond markets.
Oh, I actually loved, once again, the enthusiasm that you bring today, Sean, and you put it into bond markets.
That's right. I mean, they're basically the group of investors who spend all their lives thinking about interest rates, what's going to happen. They're now pricing in 4 rate cuts, Michael, 4 rate cuts over the next year in Australia starting in May as the Reserve Bank tries to reinvigorate growth. Between now and that board meeting in May, I think it's the 20th of May from memory, we have a federal election and the all-important March quarterly inflation numbers. Now, ANZ economists are even more aggressive. They're calling for 3 successive rate cuts starting in May and finishing in August. You don't want rate cuts because the concern is that the global economy and the local economy is tumbling too much, but it is kind of silver lining for we mortgage holders.
Yeah, indeed. But just to kind of illustrate, Sean, how big the impact of this is. This is going to affect superannuation funds as well, which means that it's going to affect pretty much all of us.
Pretty much all of us. When you wake up, if you wake up this morning and you check your super fund and you knew what it was a week ago, you won't be happy. A lot of the big super funds rode the Magnificent Seven tech boom on the way up. They're going to be suffering a few bruises today. There are also other reasons for bruises among the super funds, including a cyber attack on a bunch of those groups. More of that shortly. Also, very bad timing for plenty of baby boomers who are retiring at the moment. Superannuation is a long-term thing, but you don't actually want to be accessing your superannuation at a time when the market has tumbled too much. So plenty to be concerned about.
Sean, our interview coming up today, we've got a couple of pieces coming up after the show. We've got Fear and Greed the week ahead with our resident economist, Stephen Koukoulas, who has great insight into all of this. But if you want to get your head around this, around the politics of it, around the impact on investors and the impact on global markets more broadly, the interview today with AMP Chief Economist Shane Oliver, you do not miss it.
Yes. I don't think I've ever seen Shane flummoxed. I think that's fair to say. Great talker. And I wouldn't say he's flummoxed, but he's kind of halfway there about what's going on at the moment.
Yeah.
And he tries to give a rationale for it, but I think even he's at loss for words about what's going on. And it is a great chat because he really goes through what it all means for the economy, but also for investors.
Yeah, and he is, of course, as well, the head of investment strategy for AMP. So he is across every aspect of it. So stick around for that one. It's coming up later. Sean, one more before we take a break. Prime Minister Anthony Albanese says a re-elected ALP government will spend $2.3 billion to provide 30% rebates on household battery systems from July this year.
Housing and batteries are one of the focal points of this campaign, with the opposition expected to announce a similar program, but certainly a battery program before the 3 May poll. For his part, opposition leader Peter Dutton yesterday was campaigning in Tasmania and Melbourne. He said he would cap international student arrivals, easing the housing crisis. About 1 in 3 Australian households have installed rooftop solar systems, but only about 1 in 40 have a battery system. And that's pretty much because it's really expensive to install a battery system. Now, the government's plan on an average house will save about $4,000 purchasing a battery. The problem with not having a battery, of course, is that people, when they require energy, particularly in the evening hours, they're not getting it from solar because there's no sun. They don't have a battery to store it. So they're typically jumping into the grid where energy prices are much higher. So the goal is to overcome that.
All right. Massive day today, Sean. We'll be back in a moment with the rest of the day's business news. Sean, there might be carnage on global financial markets, but that hasn't yet filtered through to the local housing market, with the preliminary clearance rate for auctions over the weekend rising to almost 71%, the highest level in 6 weeks, which almost feels kind of counterintuitive. You would expect, with so much confusion and uncertainty and concern out there, that it would be playing out immediately in the housing market.
Yes, you would think so. Now, there were more than 2,500 auctions. First time the preliminary clearance rate, I said that word right. Michael, on the weekend, I won't name her, it was a friend, and she said, she said, you can say the word preliminary. And she didn't actually say that. She said, you always get stuck on that word. And I blame you for that, Michael, for pointing out that it is the hardest word in the English language for me to say.
And the worst part is that now that everyone pays attention to it, we just wait with bated breath for you to say it. And so far, you're actually going pretty well.
Well, it was the first time since mid-February that the preliminary clearance rate was above 70%.
Perfect.
Most cities recorded a rise. Melbourne came in at 73%, Sydney at 69%. Adelaide led the mid-sized capitals with a preliminary clearance rate of 88%, ahead of Brisbane at just under 60%. There you go.
Now you're just showing off. Now, it's not likely, Sean, but the Reserve Bank has warned that a sustained downturn, so sustained, downturn in the Australian dollar could spark a crisis for the country's superannuation sector, risking $4.2 trillion in savings.
So this is all related to our earlier story. The central bank, in its semi-annual review of financial stability, says if there is a shock in financial markets that triggers funds to cover margin calls and currency hedges, then things could get rough. The Reserve Bank says it's a situation that is extreme but plausible. It comes as regulators are wary that an international shock could hit super savings, particularly since an increasing amount of money is being invested overseas. So, I mean, this is all about the sell-off on Wall Street. If it is sustained, what does that mean? Nearly half of the assets held by the largest super funds are overseas, according to the Reserve Bank. It, quote, which are protected against losses related to currency movements with foreign exchange hedges. The problem is, if they're out of the money and they have to redo those hedges, then it could cost super funds and we as individuals a lot of money.
I think it's interesting that they're talking about a situation that is extreme but plausible, because there's clearly on a lot of pressure on bodies like the Reserve Bank to model these things that, sure, might not happen the way that they are speculating or modeling, but the pandemic, for instance, has shown that these very
stuff
extreme
can happen. Yeah.
And they need to be prepared and model it. Just staying with the Reserve Bank, its system stability report.
Oh, I like that. Is that your nemesis?
Well, no. I mean, today it obviously is, but it's not. Yeah, today it will be. Anyway, its system stability report says budget pressures have eased for households, and the share of households that are behind on mortgage payments has stabilised at pre-pandemic levels.
It's good news. The bank says cash flow pressures will remain widespread in the short term, but should ease further in coming months. But the central bank's worried that expectations of lower interest rates could cause households to take on too much debt. Already, figures from the Bureau of Statistics suggest household spending is holding up. Data on Friday shows 5 successive months of higher household spending. In terms of business, the Reserve Bank says most are still making profits despite slower economic growth and higher costs. The good news is that signs of business financial stress have stabilised. Cash flow pressures are expected to ease. And on insolvencies, the Reserve Bank says they've risen but remain slightly below the pre-pandemic level trend and pose little threat to stability.
Now, you mentioned this next one earlier, Sean. An unknown number of superannuation fund members have lost thousands of dollars of their retirement savings in what appears to be a coordinated cyber attack on Australia's super sector.
The Fin Review is reporting that major industry funds, Australian Retirement Trust, Australian Super, Rest and Hostplus, were all breached. Insignia, the owner of the 180-year-old MLC brand and the largest retail superannuation fund, also suffered a cyber attack. Aussie Super said 600 passwords had been breached, while Insignia said 100 of its members' accounts had been tampered with. Rest said about 8,000 of its accounts were affected. The amount stolen is unknown, though at least a handful of members of Aussie Super lost around $100,000 in total, and the fund's working on recovery efforts.
Wow, these are significant sums.
They sure are.
Turning to international news. Speaking of significant sums, Sean, the world's 500 richest people suffered the biggest two-day loss ever on the Bloomberg Billionaires Index as fallout from President Trump's tariff announcement just decimated markets across the globe.
Billionaires on the wealth list lost a collective $536 billion US dollars. That's about 900 billion Aussie dollars in just 2 days. Almost 90% of the billionaires tracked by the Wealth Index saw their fortunes decline. The average was about 3.5%. No one lost more money over the 2-day stretch than Tesla's Elon Musk, with the EV maker's share price falling 10% on Friday, US time, cutting about $31 billion from Musk's wealth. His yearly loss thus far is $130 billion. Incredible. Meta Platforms founder Mark Zuckerberg followed with a $27 billion US, that is, loss as the social media company dropped almost 14% over that Thursday and Friday trading period. Flip side, Nike founder Phil Knight, he was one of the few winners. So the shoe company stock got hammered on Thursday, or prior to Thursday, in fact, when the tariff announcement was made. So that was Thursday, US time. It gained 3% over the weekend, though, after Donald Trump said he'd had a very productive call with the Vietnamese leader over possibly eliminating a 46% tariff. Much of Nike's manufacturing is done in Vietnam. It just shows how fickle the market is at the moment.
Oh, absolutely. You mentioned Elon Musk there, Sean, and rumours suggest that he is, I suppose, on the nose, you might say, with Donald Trump.
Last week, Politico and ABC in the US reported that Trump had told cabinet members that Musk was on the way out. Over the weekend, Musk came out and said that the European Union and USA should move to a free trade, tariff-free zone, directly contradicting Donald Trump. Now, that's not normally a good thing if you want to stay friends with the president, and it just adds to the speculation that Elon Musk's days of glory might just be fading somewhat. Although I want his child to be in the White House once again, telling Donald Trump, what was he saying? Be quiet or something, was it?
Yeah. And that there's been some remarkable scenes, haven't there, from the Musk-Trump relationship. That is not a small thing to disagree over, is it?
No.
That is
to come out so publicly on it.
Oh, yeah. It does feel like there could be some cracks appearing in the relationship, yes. Sean. Up next is Fear and Greed the week ahead with Stephen Koukoulas, and then the daily interview. Dr. Shane Oliver from AMP. Must listen to that one just to help get your head around everything that is going on at the moment. And
also, I thought you were going to forget it. And once you're finished listening to that, jump on fearandgreed.com.au and sign up for our newsletter. It comes out, sort of 5:30, 6 o'clock after the show we put it out. So probably out by 6 o'clock every morning, I would say. And it kind of the main stuff you need to know as you're going into work to look smart.
Your enthusiasm for this is unbridled.
Oh, yeah, Sean. But I'm a text guy from way back. This audio business, this is your world. I'm new to it. You're the one that saves me in the text world. I kind of have confidence in that one.
It's actually a good point. The fact is you sign up for this newsletter and you are getting a column written every day by a business journalist who has run newspapers in this country, and you are getting it for free every day in your inbox. So it is a no-brainer. fearandgreed.com.au. Sign up. I'll put a link in the show notes as well. Thank you, Sean.
Thanks, Michael.
It's Monday, the 7th of April, 2025. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.